Hey everyone, welcome back to your weekly market outlook. This is for the first day in the month of April 2024. So let's start the second quarter with a quick recap of last week. I don't think we have a lot of significant data from last week. We do see the Australian inflation number kind of fall down a little bit. I think one of the key drivers last week was definitely the final GDP in the US. That came in a lot better than what the market is expecting. It's at 3.4%. Consensus was just at 3.2%. Right. In terms of weekly unemployment claims, we were kind of stable around 210,000 there. So a little bit of a hinter into this week's employment numbers, obviously. So let's just jump in onto this week. There's a lot of data here, a lot of reminders, a lot of daylight time savings there. We've got the Eurozone, the UK, that has basically just shifted. Then we have Australia and New Zealand at the end of the week. So just keep that in mind, as well as Monday. It's still Easter Monday, so it's still a public holiday. So expect low liquidity in the market. So don't be surprised if you don't see a lot of movement or kind of a lot of exaggerated movement in the market. So on Monday, we're kicking off with the ISM manufacturing PMI numbers. And then we have the UK preliminary CPI numbers on Tuesday, JOLTS job opening numbers as well on Tuesday. On Wednesday, we have the ADP numbers. Probably not a good thing to focus on. I think we should focus on the NFE numbers. ISM services PMI numbers is also going to get released on Wednesday. And then obviously on Friday, that's a big day there. Not going to be a lot of focus on the employment numbers, just to keep that in mind, because the FOMC has basically said whatever happens with the employment numbers, that's not really a factor right now for them to kind of consider the rate cut that's coming in 2024. But let's take a look at what the market is expecting here. The unemployment rate is expected to remain stable at 3.9%. The NFE number is expected to come in above 200,000. We are expecting 205,000 at this point in time. Previously, it was at 275,000. So we're expecting really a stable labor market in the US. I think any surprises would probably come from the unemployment rate there. But 3.9%. Remember last month, that was a jump from 3.7% to 3.9%. We're not sure what's likely going to happen. Are we going to get a revision downwards from last month's number, or is it going to jump up a lot higher? But considering that the unemployment claims, the weekly unemployment claims has been stable, it has been steady, we're not looking at a significant drop week to week. We are expecting the NFE numbers to come in pretty much as per consensus. All right. Let's move on to the technicals. Let's just jump in onto the Aussie USD right now. Very strong support at 65 cents. And we can see that that's basically been the floor for the month of March 2024. So we're starting in April here. We are below the Ichimoku cloud. We still have that resistance at 66 cents. But right now, the main focus for a lot of traders is definitely the 65 cents. Can it hold the pressure that the Aussie USD is facing right now from the US dollar? Should we lose 65 cents? Previous support levels that we mentioned still applies. 64.50 is definitely going to be the main focus. That's also where the support 2 on the weekly pivot is located. Below that level, it's going to be 64 cents. Now, if we take a look at the Euro USD, we have lost the sell side liquidity. It's just that last week when it happened, people were kind of away for the holidays already, which is on Thursday. And you see the movement on Friday, it was an okay movement. But overall, if we take a look at the movement here, it maintains that position below 1.08. So we can confirm that the sell side liquidity has been broken. Right now, this is also below the Ichimoku cloud. So we could actually see further pressure to the downside, but we're not expecting crazy movement here. We're no longer expecting a sudden quick drop to 1.07. We're more looking at a kind of gradual push right now towards support at 1.0750, and then we should have that stronger support at 1.07 for the Euro USD. The pound USD has also transitioned back below the Ichimoku cloud from the drop there. We can see from 2 weeks ago. So pound USD right now, it is well supported at 1.26. If we take a look at the current pricing, we do have a little bit of resistance at 1.2650, but we're not going to find that strong resistance until about 1.27. Now this really depends. If price is being pressured below 1.2650, we are more than likely to actually attempt a break to the downside below 1.26. Should this be the case, we still have another block which is going to act as a stronger support between 1.25 and 1.2550 for the pound USD. Right, dollar Japanese yen. A lot of chatter coming up from the financial ministry in Japan there in terms of potential intervention. You know, one of the few things that I kind of find weird is that they keep mentioning that, oh, you know what, it's not moving according to fundamentals because we just hike interest rate, you know, the yen should be stronger. But if we take a look at the pressure here on the dollar Japanese, and obviously a lot of traders are still looking at that in a way that, you know what, if Bank of Japan does hike interest rate, it's not actually going to change a lot of stuff, because a lot of market participants is kind of anticipating that Bank of Japan does not have room to continue hiking interest rate in 2024. So that's one of the main reasons why the Japanese yen is still being pressured here. The second thing is obviously the adjustments that was made by the Chinese government towards their offshore Chinese yuan. That obviously gave a lot of strength to the US dollar, and that also has kept the lid on, you know, strength coming back for the Japanese yen. So a lot of verbal intervention, no actual intervention as of yet. So I think the financial ministry is actually focusing on a few things. 152 is definitely the level to watch out for. Now, if we take a look at where pricing is right now, it is pretty much at about the same price when Bank of Japan actually intervened twice in 2022. So are they actually going to do that again? We all know from experience that what they did was basically just causing a little bit of a short-term gain in the Japanese yen, but it doesn't have a long-lasting impact, and they literally just wasted a lot of money there. So again, you know, it really depends what Japan is actually going to do. But I think the market is kind of spooked out. They are not kind of willing to take price above 152 just in that fear of intervention. So this is kind of a deadlock situation. It's refusing to come down because fundamentally there's nothing to actually prop the Japanese yen as it is. The Japanese yen is still not an interesting long-term investment, so we're not looking at Japanese yen strength coming in. And also, one of the few things to point out as well, with March 2024, typically at the end of the March there, you know, it's kind of the end of financial year in Japan. We saw a lot of profits from multinational companies that originated from Japan to kind of repatriate the Japanese yen. We're not seeing that flow at time of recording. All the data that we have towards the end of the close for the financial year in Japan is that, you know, the funds that were overseas remain overseas for future overseas expansion. Now, this is actually echoed by a lot of companies from Japan there. So we don't actually see that inflow of repatriation. So we don't actually see that jump in the Japanese yen strength. So again, all this right now, it depends on whether or not the market is brave enough to go against the verbal threat coming up from the finance ministry of Japan. If they do, or if they're brave enough to actually go against that, then we expect that break above 152. And then, you know, they might actually verbally say, yeah, you know what, we're looking at a higher level, 153, 155 for potential intervention. But I think going forward, we are definitely going to be, you know, we're definitely going to get that verbal comments coming out from the Ministry of Finance in Japan, just to, you know, kind of spook the market out, see if we can actually spook the market without actually having to spend money in intervening in the market. I think that's the current play that the Ministry of Finance is doing. But from a technical standpoint, this is pretty stable as it is. We still have that strong support from the fair value gap, pretty much at 150. The movement in the past 2 weeks, we kind of just trapped between 151, 152. So we do anticipate a potential breakout to happen. Either it breaks above 152 or it breaks below 151. And then we might actually see that retest towards 150 all the way down to 149.50 for the dollar Japanese yen. All right, lastly is gold. So gold, you can see that push higher on gold here. Obviously, there are still demands in terms of gold there because there's a lot of uncertainties going on in the market. And from a technical standpoint, we saw that break above 2200. Now, last week we were kind of expecting a little bit of a deeper pullback. We just don't see that. Now, the warning continues here is that if we do not see a proper correction in gold and it continues to grind higher, there are going to be a higher risk of a much deeper pullback. Well, the pullback is technically not deeper. It's just that the market continues to go on without a correction, leading to a higher range when the market does correct itself. Now, support, we have a new support right now. We have a fair value gap that was created on between Wednesday and Friday. That falls around 2200 as the base of the support, all the way up to about 2230. Right now, consequent encroachments are going to fall at 2220. So that will be the stronger support for gold. Now, looking at the current movement here, obviously this is already above 2250. We might actually see this one grind a little bit higher. There might be attempts to go towards 2300. But if it fails, then we anticipate a stronger base to start building up at 2200. I think there might still be demand for it. If we lose that 2200, then that's probably cue for a drop in the market. And if we go by the previous support level, we have a lot of support to the downside. So we got support at 2200. That should act as a stronger support. We lose 2200. We still have 2150, which was the support throughout the month of March for gold. So that's pretty much it for this week. Again, Monday is Easter Monday. So for today, we're still expecting a little bit of a quiet market there. But overall, the job numbers coming out from the US at the end of the week, while it is usually important from the perspective of the Fed, it is no longer a priority for them to actually focus on the employment numbers. Okay, so with that, good luck for your trades, and I'll see you soon.